How's it going, everybody? It's Stas here. Welcome back to another video. So in this video, we're going to be going over my M1 Finance portfolio, and I want to share with you all how badly it's gotten decimated here over the past couple of weeks as the stock market has seen a massive decline. And the purpose of this video is not for me to go over every individual holdings, break down cost basis, things like that. No, the point of this video is I want to share with you all what I'm doing right now with this portfolio. I don't have a lot of cash in it, but I have cash in a high yield savings account waiting to come into this portfolio. So I want to share with you all which stocks am I focusing on, which stocks do I want to buy more, and kind of what's the game plan right now. So if you guys enjoyed this video, hit that like button, consider subscribing to the channel, and feel free to go down below in the description box and check out the previous episodes of this M1 Finance playlist where I'm building a portfolio. I started this back in July, and you guys can see it right here, back in July, the 2nd of July in 2019. So let's just jump right into it, and you guys can clearly see M1 Finance upped their game. They completely changed their platform, and I didn't know this until yesterday because the truth is I haven't signed into my M1 account here for a couple of days. That's the truth, right? Because it is a long-term account. I'm not looking to nitpick the prices every day. I just kind of buy and kind of forget about it, and then of course strategize, and that's what we're going to talk about in today's video, of course. So let's get right into it. Right now, the M1 Finance portfolio is valued at $2652.73. And the money weighted return here, this isn't too accurate because you can see it says 54% down, but my loss is only $718. That's obviously not 54% of 2600. So for an overall return, I like going here to holdings. I think this is a bit more accurate. Overall, the return is 22% in the red. So at this point, out of the 20 positions I own, 22% in the red here, and the money weighted average return, which you see here, is 54% in the red. And the truth is, guys, I haven't deposited money into this portfolio since the middle of March. And again, it's because I have a lot of money waiting to come in my high yield savings account. I think I have about $1,500 to $2,000 waiting just for this portfolio in general. And another reason is because honestly, the market has rallied over these past couple of days, right? Is my ThinkOrSwim open? No, it's not. I would show you the S&P, but over the past couple, I'd say 10 days, the market's rallied. So I want to see a drop in the markets before I do start nibbling into some of these stocks here. And you guys know, if you've been following my playlist here on M1 Finance, I don't do the auto invest. I like picking the individual stocks when I want to buy them, kind of throughout the trading days, throughout the trading sessions, right? And in this case, I'm focusing on companies that I know are going to make it through. I mentioned before that I want to add Pepsi in this portfolio, and that's a company that I really love. Pepsi, dividend company, it has products that are pretty much staples, right? The Pepsi brand, and they have a lot more other brands they owned, like Doritos, Tropicana, I believe, and just a bunch more, right? I can't name them off the top of my head, but companies like that. Pepsi, I'm focusing on J&J, which, guys, you can see this is literally the only green stock right now. I believe there's one more, which is not even a stock, but it's the only green in my portfolio. And the other one is, of course, GLD. Actually, Amazon is green as well. So you can see a lot of these companies haven't gotten too far from my cost basis quite yet, so I don't want to add into them, which is why I'm waiting for that overall dump. So the main stocks I'm focusing on are Johnson & Johnson, and believe it or not, guys, I'm interested, not adding too much more here, but I'm interested in buying a little bit more of Altria here to average down, because my average cost is around 44 bucks. We're trading at about 37 now. And then again, Altria did hit a $30 low a couple trading days ago when the markets were really, really bad. So I'll probably wait and see, but anything under 35 in Altria, I'm probably going to buy, because I truly believe their dividend is still pretty safe at this point, and you can clearly see it's yielding a whopping 9% right now. So I'll probably buy a little bit more in Altria, but the truth is I'm focusing more on J&J, looking to get an entry on Pepsi, and I want to get more money into Disney. And you guys may be saying, Stas, why are you buying Disney? Their parks are closed. They make up 30-40% of their revenue. Well, the truth is, guys, this is a company that I believe in 10 plus years out. And I know this is a crazy time we're in, the CV, everything going on, the economy pretty much collapsing. It's a crazy time, but I believe these select few companies that we're mentioning in this video, they're going to make it through, Disney being one of them, and I feel very comfortable buying. And you can see my average cost here. I know I didn't say we're talking about average cost, but hey, why not, right? My average cost is $132, and right now they're trading at 93. So if this thing gets back to 80, maybe even 70, I'm going to just completely add, probably double. I'll probably double my position, maybe even 3x my position if it gets back into the 70s, to really bring that cost basis down. And if we're looking at some other companies here, Boeing, this is one that honestly I got kind of screwed on. I bought a little bit early, way early. It was before the whole CV craziness, but still, I bought into a company that I understood it had troubles. I understood the management team, everything going on with the 737. I understood this stuff, right? And I still bought in, and then the CV crisis happened, obviously. Now BA is in risk of bankruptcy, right? They're going to get bailed out, but still, there's a lot of negative pressure on them, and I'm getting slaughtered, right? My average cost is $243, down about 50% pretty much. The stock's trading at $124 per share now, and this is one that I am not looking to add more in, believe it or not. Again, I only want to add fresh capital into companies that are not going to cut their dividend. That's very key, very, very key. Or they're very likely not to cut their dividend, right? Companies that are not in risk of bankruptcy, companies that I know are going to make it through. So another one of those companies is McDonald's. This is one that I think is extremely valuable here, at least for me, because my average cost is close to $200. Now we're trading at $160, dividend yield at 3.12%. And arguably, guys, the PE is still a bit pricey on McDonald's. It's at a 20 right now. So I think if the markets take another leg down, which if you've been following my channel, you know that I think it is going to take another leg down. I think anything under, let's say, 150, 140 for McDonald's, get that PE down a bit to, let's say, 16, 17. That could be a screaming buy, to the point where, kind of like Disney, I'd probably double my position or maybe 3x my position to really bring that cost basis down. So you can see a lot of these companies, they're blue chip stocks. They're not fly-by-night penny stocks that I'm looking to buy. No, these are blue chip companies, and a lot of these that you're seeing at the bottom of my portfolio, like Wells Fargo, I'm completely getting crushed on that. Even PayPal, actually PayPal's holding up decently. AbbVie's holding up decently. Even AT&T, they're pretty loaded with debt. I'm probably not looking to add more. Maybe I'll add a little bit more. But for sure, Wells Fargo, I'm not touching it. Boeing, I'm not touching it. PayPal, I'll probably just leave it right now. If it gets a little bit lower, maybe I'll add. MasterCard, I'm actually looking to add, but under $200 per share if we do end up getting back under there. And Amazon's a company that, believe it or not, although it's not, actually it's recession proof, I'd say. There's no way Amazon is going bankrupt, right? But it's honestly not at a price right now where I'd like to buy. So I'm thinking when these massive tech companies, and I've mentioned this before, Microsoft, Apple, Amazon, when they really start to get hit, that's when we'll see the stock market in general take that leg down, and that another leg down, that is, and that is where I'm looking to buy more Amazon. So overall, guys, and again, this is not an in-depth video where I'm talking about each stock in depth. This is kind of like what I'm focusing on, so you can go and maybe do more research if you see potential in these stocks. But that's pretty much it, right? These are the ones I'm focusing on. Maybe even Duke Energy, DUK. This is a regulated utility. Maybe I'll add more into that one as well. And I'd love to add more into Microsoft, but again, I see these big tech names coming down lower. That's kind of what I'm waiting for before I do add more. And of course, SPHD, DGRO, these are two ETFs that are pretty much a staple here in my portfolio. They make up 20%, and I'll probably, maybe not to DGRO right now, but I'll probably add more SPHD in these next couple of weeks as well. So before we end off the video and before I send you guys on your merry old way, let's talk about activity very quickly. I've been getting a lot of dividends in this portfolio. Oh, and realty income, that's another one I might add a little bit more of here as well. And you can see March has been jam-packed with dividends. I'm not too sure when the previous update video was. I feel like it's been a while since I've showed you guys my portfolio, but last time I bought, you can see, was $200 on March 12th, $200 worth of stock. And overall, this month in dividends, I got a dividend from Boeing, J&J, 3M. Oh, and 3M's another one I might buy some more of here. I got a dividend from Realty Income, Duke, McDonald's, VEA, SPHD, and DGRO. So jam-packed month in terms of dividends. Right now, I got about $7 in cash, which is all from dividends this month. And honestly, I'm probably going to add probably about $500 into this portfolio just so we can be sitting here probably next week in anticipation for that move down for the S&P, which again will open up a lot of opportunities. So overall, that is my portfolio right now, what I'm focusing on, and kind of some thoughts, right? I'm focusing a lot on these blue chips. That's really what you can take away from this video, guys. Companies that can make it through recessions, that pay dividends, that are not too at risk of slashing their dividends. And you can't say a company is 100% dividend safe because that doesn't exist. They can always cut the dividend a little bit, but you have to be very confident in the companies you're buying that they're not going to slash their dividend based on your analysis, of course, your research, and digging into the company itself, which is extremely important when investing in stocks. So hit that like button for me if you guys did enjoy this video. Consider subscribing, and don't forget to check out that playlist down below in the description box. And if you guys want to sign up to M1 Finance, I believe you get $10 if you do use my affiliate link down below in the description, and you simply deposit any amount. So you want your free money, sign up to it, and this is a very great long-term brokerage that I personally use and love and that I trust fully. So I'll catch you all in the next video. Thanks again for watching. As always, peace out.